To Steve with the Fed's decision.
Federal Reserve raising by 25 basis points to a new range of 4.5 to 4.75. This is the 8th straight hike by the Federal Reserve since March, up by a quarter to 4.5 to 4.75. The Federal Reserve sees ongoing increases as appropriate, so that phrase that some thought might come out remains in. The Fed is still en route to a level it calls a sufficiently restrictive level of the funds rate. One little bit of dovish commentary here says inflation has eased somewhat. However, it says it still remains elevated. The Fed is signaling a new focus on the extent of rate increases and not necessarily the pace. So it says in determining what it now says is the extent of increases. That word had been pace previously. So it's not thinking about it going up by 25. It's thinking about how far it goes at this point. On the economy, it sees modest growth in spending and production. It says job gains have been robust. The unemployment rate is low. All language from the prior statement. The decision was unanimous, with the 4 new voters replacing the prior 4 who were out there. So, Kelly, back to you. Up a quarter. Still thinking about ongoing increases, still heading to a sufficiently restrictive level.
Any dissent, Steve? That's a pretty big deal that they left in
unanimous.
The word ongoing. Wow.
Yeah, they left in ongoing means they have more to go. I guess that's pretty clear. And they're not backing off anyway, this idea of going to what they call a sufficiently restrictive level, which tells you that they don't feel like they're there yet.
Right. And as we can imagine, Steve, thank you. We'll come back to you in just a moment. Markets are reacting about as poorly as you might expect. Although we were all saying all week long we're probably bracing for a hawkish surprise. You can see stocks taking a leg lower and bond yields perking up a bit.